I'd like to call upon Mr. Vivek Subramanyam. He's the CEO of iCreate software.
So just wanted to get into, there was a talk on value and, how do you, the ROI, the KPMG session where we were talking about how do you validate what is the value that IT adds and so on and so forth. So just wanted to focus one on economic value, so defining what it is and how, from a BFSI perspective, from a banking perspective, the amount of data that exists already in, the various investments that have been made in the last 10, 15 years can be leveraged. One is that there's a lot of switching that is happening, especially when service providers such as banks, insurances, etc., are not able to meet, the right kind of service requirements from a customer. Especially in the emerging markets, the chances of that switch is significantly higher. The other is, typically high performance businesses, one of the common themes has been the ability to build customer loyalty. A requirement from information, insights, etc. are ever increasing in the organization. I mean, one primarily from, hey, how do I enable growth? I think management decision making, across various functions. And the second is around, from a compliance and regulatory standpoint, which again came up, the amount of requirements that are needed are significantly higher. So the needs of the information are going. So this is more from the demand side. On the supply side, statistics from Gartner, true from, reports across the board, significant number of, data sources or databases are existing in a typical organization. On an average, they say 14 to 16. But increasingly, in a BFSI context, that number is significantly higher, right? And there are investments that are being made in certain kind of customer-facing solutions where, the ROI ability to define that is fairly easy, right? But typically, in the back-end integration is a problem. And, newer regulations come in, there will be newer sources of data that come in, and all of that will lead to some kind of challenges in from a data standpoint. And more importantly, the world of data warehousing, if you call it business intelligence, MIS, all of that, there's been consolidation that I'm sure all of you would have seen has happened. And now there's only the big four that remain, which is your Oracles, your SAP, IBM, etc. And the only focus there is now more on integration as opposed to, hey, how do I lower the TCO? How do I help my customers get better value out of the intelligence? So these are some of the things that we saw when we decided that there is a space in the business intelligence for banking. It has to lead to some end business impact, right? I mean, either my customer satisfaction has to be higher, either my it has to enable, and that was one of the hypotheses that we got into this business with in terms of cost and so on. And so economic value, for this discussion, the way I've defined it, I'm taking it as a function of business value, cycle time value, and the total cost of ownership. And how do we drive value in both of these? Some of these, this would be your business value. It would be loyal and satisfied customers. That's definitely everybody in this room is trying to chase. It would be profitable products, right? Identifying what products are profitable, how do we sell more of those, what makes it profitable, and so on. Efficient operations, and again, in a banking context, it should be under an acceptable level of risk. The ability to make better decisions faster itself is an advantage. So at the right time is important. And obviously, the total cost of ownership of any such, initiative has to be as low as possible. So if you take a look, 4 views that we took, there is the customer view, there is the product view, the operations view, a risk view. Some of the things that will drive economic value is if you were to know, is the understanding of the customer good? Right? Who are the customers? What are their needs? Which of them is most profitable? Which one of them is least profitable? Right? And similarly, how do I increase? One of the surveys that I was reading recently said that the higher the average number of products from a bank that a customer consumes, higher is the profitability, right? And similarly, from a product or a channel view, what are the products that are most profitable? What are the products where the level of risk is high, right? These are all insights that I think will be very valuable from a customer segmentation or a product segmentation, profitability analysis. These are solutions that are available, all of which, if taken advantage of, there's a lot of value that a bank can derive out of those, right? And then, there is the operations view. You have different budgets, but the amount of budget is always, challenged in the sense if I had more, I would do better collections. If I had more, I could do better marketing. I could do more targeted communication and so on. So how can you increase the ROI from the same amount? You can talk about customer specific pricing. And if each customer has a different characteristic, why can you not price at a customer level? And what kind of investments or insights do you need about that customer before you can actually make such a thing happen? Even from a reporting standpoint, there can be a single view across the bank, across multiple source systems. Essentially, if these insights are leveraged, it would lead to better customer satisfaction, more products per customer, better profitability, higher efficiency. Churn will be managed. You'll be able to predict delinquency, default, take some proactive actions, and reduce the impact of some of those. And again, achieve some kind of cost out. There are enough solutions possible in each of those. How can you improve operational efficiency? How can you manage risk better, etc. But if you just look at from a customer view standpoint, any business, including banks, insurance companies, you need to acquire new customers. You need to retain the existing customers. You need to increase, cross-sell to the existing customers, increasing the relationship, and then develop that relationships. And if we don't do this, I think it will be a challenge on an ongoing basis. So you have various channels. Every customer will have some mix of these channels. Is the kind of experience that a customer has across all the channels the same? Or there are disparate messages that are hitting the customer depending on where he is. I think what is critical is finding out what the right message is for a customer, figuring out who that right customer is, and what is the right time to communicate that right message. The ideal situation is that we should be able to do all of what we discuss, right? Have a single view of the customer across multiple products, etc. And all the benefits that we were talking about, how to take advantage of those. So just talk about at a high level the product that we built. It is not a technology, right? It is powered by technology, but it's not a technology. It's a solution that's been developed for banking at the moment, and that's being extended into the insurance world as we speak, where we're saying that it's not very clear, but essentially BI for banking, banking BI in 100 days is something that we're saying. And the reason we believe we could do, live up to that is essentially because one, the entire company is not just technology, but has a lot of functional people. It's all people who've been in banking technology or as bankers who realize that the solutions that exist are not the most optimum ones, right? So typically, what kind of, based on your role in the hierarchy, based on the function you play in a bank, what kind of reports would you need, right? Starting with what kind of operational report, what kind of dashboards, what kind of trends would you need to see. All that has been built already for the banking context. So the credit person will see credit related reports and dashboards and drill downs and so on, etc. And to power that, there is a data model for banking that we built, which is specific to, so you don't need to design what a data model will look like, right? So all the elements across different kinds of products and the kind of relationship that exists, that's something that's been predefined, which powers these reports. And then at the bottom end, there is the actual sourcing of the data, which needs to be stored into the data model, which feeds this solution, right? So that again is something we built adapters for industry leading, systems, financial transactional systems that exist. We believe that domain and technology have to go together, and because we brought it together, the ability for us to do this fast is higher, and significant lead time reductions because sourcing the data, adapters, connectors to your FlexCube, Temenos, Mysis, all of those are connectors that have already been built. The data model that they will feed into has already been built. And the reports that are needed, the dashboards that are needed, the kind of analytics that are needed, cross-sell model, etc., have already been built, and they will be customized based on each of the bank's requirements and contexts. So we should be able to roll it out significantly faster, but yes, it depends on the number of source systems exist. We have taken around 5 to 8 source systems we should be able to do this time. If there are banks which are larger and have significantly higher source systems, that would take some more time. There is BW as a model that is available, and we've not done a comparison, but we have a fairly thorough, we built the model ground up, and we've had in all our installations and based on all our experiences, typically 80 to 90% of the model remains the same. There may be some customization based on either country specific nuances or depending on specific customizations in business model that each of the banks may have done. But to a large extent, there is The model itself is robust and we've been able to service multiple customers with those.